money, your stories, your freedom. The Peter Schiff Show.
This is Peter Schiff here at SchiffRadio.com on this Friday, the last day of the week. In fact, this is the last day of the quarter when it comes to the stock markets. And, of course, I'm hearing that this has been the worst quarter for global stock markets, I think, since the fourth quarter of 2008 in the depths of the 2008 financial crisis. Markets around the world getting beaten up because of economic problems, not only here in the United States, but in Europe. And so that has sent the quarter off to a very weak start, and this is the end of that quarter. It's been weak, I think, across the board. Emerging markets, developed markets, commodities, precious metals, everything has gone down. Well, I'm not really sure the extent to which gold itself has gone down this quarter. I got to check the math on that because it did really well in the beginning of the quarter. So I got to see exactly where it is. I know gold beat stocks, that's for sure. The gold price did better than stock markets. So if you want to compare gold to stocks, it certainly outperformed. Gold is slightly positive today, even though the Dow Jones is still negative, although it's off the lows. I mean, early this morning, the Dow was down over 100 points, maybe 120 or so points. It's now cut those losses almost in half, down about 68 points. And gold stocks are actually positive. They were lower this morning along with the market, but the Huey is now up just 1% or so. I still think that even though gold stocks have fallen recently, that the fundamentals have improved, and I think that you're going to see more money moving into that segment. We've had some news coming out overnight in Europe. The inflation rate in the Eurozone, the countries sharing the common currency for the month of September, coming in a lot hotter than expected at 3% for the Eurozone. In Germany, too, the inflation rate rose. I got that number here somewhere, 2.6% versus 2.4% in August. I think that is the highest inflation rate in more than 3 years in Germany. And, of course, this is calling into question the hopes of many. Of course, not me. I never thought we were getting a cut out of the ECB. But a lot of people were looking for a reduction in interest rates as additional stimulus. Clearly, as inflation is getting worse in Germany and the Eurozone in general, it's difficult for the central bank to justify cutting rates when, in fact, they should be raising them. But that is not strengthening the euro. The euro is down anyway, based on the idea that, well, if Europe can't come to the rescue with more cheap money, that's bad for the stock markets in Europe and around the world. And again, that is sending people into the safe haven du jour, which happens to be the U.S. dollar, even though, in my opinion, those seeking safety in the U.S. dollar will find none. Temporarily, maybe, but it's like seeking safety in the eye of a hurricane. You may think you're safe for a while, but when you realize exactly where you are, it's not the place to be. But a lot of people are hiding out there nonetheless. Also, we got some economic data this morning in the U.S. on consumer spending and income, and the income actually dropped in August. They were looking for a gain, I think, of 0.2%. Instead, personal income dropped by 0.1%. Spending increased despite the decline in incomes. I think it was 0.2, which meant the savings rate fell to 4.5%. That is the lowest savings rate since December of 2009, and is very bad news because it shows just how weak the U.S. economy is, that when people should be increasing their savings, they're actually being forced to dip into their savings just to keep their economic heads above water. So we are continuing to dig the hole deeper, because not only are Americans depleting the minimal amount of savings they have, but the U.S. government is going deeper and deeper into debt on behalf of those American families. So what we need, of course, for a genuine recovery is to accumulate more savings. But rather than doing that, we are blowing through what savings remain. And the savings are not going to finance additional investment. They're going to finance more consumption, which ultimately puts our economy in weaker shape, not in stronger shape, because then we have less savings than we had in the past, and we don't have anything to show for it except the memory of the goods that we consumed with the money that we borrowed or the savings that we depleted. Now, a lot of people look at the personal income and spending numbers and think, well, we need more spending. We need the government to stimulate spending. That's the last thing we need to do, is stimulate spending. We got into this economic hole by doing just that. We stimulated spending based on phony wealth in the stock market, based on phony wealth in the real estate market. And so the last thing we need is for over-indebted Americans who have very little savings at this point anyway to spend even more money. And it's not just individual Americans who need to spend less. It's the U.S. government that needs to spend less, because ultimately, if American citizens on their own do the right thing and increase their savings, if the government increases the debt at the same time, that's simply a drain on those savings. And if the government debt increases in aggregate more than any increase in personal savings, then anything we might have gained from the higher savings rate is lost. And in fact, if the government borrows more than we save, we're going into debt, despite the fact that we're saving, and any capital that might be freed up from the sacrifice of less consumption on the part of Americans is blown by additional consumption on the part of the U.S. government. Now, also I was looking at a news story, and it shows how everything backfires on the government. Remember, the government made a big deal about these swipe fees on credit cards. Well, now I'm reading a news story that or not credit cards, debit cards, excuse me, that banks are now considering imposing a monthly fee on debit cards of $5 a month for people who use their debit cards to buy merchandise. It doesn't apply if you only use your debit card to take cash out of an ATM machine, but if you use it at a merchant to buy something, since they can't charge the appropriate swipe fee, they're going to find a way to do it through another means, and so now they're going to do it through a monthly fee. And, of course, I'm sure the politicians are going to be up in arms about how this fee hurts consumers. These fees are tiny compared to the taxes that hurt consumers. I mean, the politicians always want to swoop in to the rescue and save us from these minute swipe fees or a $5 a month fee. But how much does that protection cost? How much money does the government take from us in taxes in order to fight to reduce the swipe fees or our cable fees? I mean, the whole thing is nonsense. And, of course, as if you have a right to just use a debit card and pay nothing for it. I mean, it's a service that the bank is providing. Don't they have a right to be compensated for that service? After all, nobody forces somebody to use a debit card. They could use cash instead. It's convenient for people to use a debit card. The banks are providing that convenience. It's got to come at a cost. Why should it be free? Why should politicians expect a private business to provide a service for nothing? And if they're providing a service, what business is it of the government's to try to legislate what that service should cost? Let the market determine. People don't have to use debit cards. They can use credit cards. They can use checks. They can pay cash. I mean, it's not like there's a monopoly here. People can choose the methods that they want. And, of course, there are some merchants that will offer discounts if you pay cash. People can get better prices for cash. The government needs to stay out of it. And, of course, when they get in, it backfires, and now you get fees coming up in other ways. Anyway, we'll be back. This is Open Line Friday. I'm assuming we have no guest, so we're going to be relying on phone calls. We got a full board, so I'll go back to the phone calls when we get back. This is Peter Schiff on SchiffRadio.com.
The Peter Schiff Show. To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America. We're sorry. Peter Schiff is back on the air.
This is Peter Schiff at SchiffRadio.com. We're taking your calls all day on Open Line Friday, 855-4-SCHIFF, 855-4-SCHIFF is the number to call to join the show. And I'll go right to the phones now. First caller is going to be, well, I'll take Lachlan, who's calling in from Scotland. Is that your first name or your last name?
First name, Peter. A bit of a Scottish name. I was wanting to, sir?
Yeah, go ahead. Barely.
Yeah. So, I was going to talk about the EU and the Eurozone. I mean, I've heard you say a few times that you think that even the Eurozone will probably hold together. And while I think that's probably economically sensible, I think that you need to get a sense of the sort of the political atmosphere. You know, I mean, the EU has always been really quite unpopular in Britain for the last 20 years. I mean, if they'd ever given us a vote on whether we wanted to be in it or not, we would have got out. But increasingly, you're seeing this in European countries. I mean, the politicians really act without any sort of popular consent. I mean, this Euro.
Yeah, I mean, I agree with what you're saying. I mean, first of all, the UK is not part of the European Union as far as the currency is concerned, so it's not involved in this. But I agree that there is, rightfully so, a lot of skepticism regarding the common currency and the nations that are sharing it, and we're seeing that now. But I believe that the problems that would result politically from a collapse of this union now will provide a catalyst for governments to make some reforms to keep it together, because the European governments really do have their back against the wall right now. See, the problem is America doesn't. We can keep borrowing money for next to nothing, and so we can keep growing our governments. But European governments can't do that anymore. And I think some of these countries realize that if they just leave the Eurozone and try to and the reason that let's say Greece would leave the Eurozone would be so we could just print drachma. That is not going to be a panacea. The people in Greece are going to suffer a lot more under the inflation that would ravage their economies based on going back to the drachma than they would by staying in the Eurozone. But I do believe that Greek debt needs to be reduced. I think that there needs to be a restructuring of that debt. And I know it's coming, and I think the sooner the better, because I think that would be good for the markets. It would be good for the euro. It would be good for the Eurozone. I think it would be bad for the U.S. because I think settling the uncertainty in Europe is going to take a lot of the luster off of the dollar, and that's going to focus more attention on our economy.
Yeah. I mean, what do you think would be the effect if Greece did effectively default outright, and say Portugal and Spain and people did as well? And people say that the effect would be that interest rates would rise across the Eurozone. I mean, this is part. They say it's part of the problem. People are giving.
Well, they would certainly rise in those countries that were defaulting. I don't think that the default is going to be, hey, if you own Greek debt, you get nothing. Okay, that's not what's going to happen. It's a restructuring where Greece pays less than 100 cents on the dollar. But Greek bonds are already trading for well below 100 cents on the dollar. Depending on what level they agree at, the Greek bonds might rally. But the point is, yes, there are going to be losses. When Greece basically officially says we're going to pay 50 cents on the dollar or something like that, then that 50 cents is lost. And we're going to have to deal with the reality of what's going to happen to the creditors. But, we need to do that. I mean, that needs to happen. And I think that if the Greek citizens are told that the foreign bankers are not going to be made whole, right, that this is not all about saving the foreign bankers, that they're going to sacrifice too, that there's going to be shared sacrifice, it will be easier to get through substantial cuts in government spending domestically in Greece, which is what is needed.
And what do you mean? They say that a lot of other banks, like French banks, for example, have a huge amount of exposure to Italian and I think Greek debt as well. I mean, the worry people have is if they default, the banks there's going to be another banking crash.
Right, but the solution right now is let's take on even more debt. Well, if the countries are going to default now, if there's a danger of default now, you increase that danger when you let them go deeper into debt. And then the default does even more damage. I know that the political instinct is to delay the pain, but it makes it worse, and it's going to make it worse in Europe. I mean, the problem is governments have borrowed too much money, and they can't afford to pay. And we can't have a moral hazard. There has to be risk. lenders have to know that if they loan too much money to a government, they might not get it back. That's the only way to restrain the growth of government. If the credit markets think that governments will never default no matter how much you lend them, then that simply supports this huge growth in government, which undermines all the countries in which the government is growing.
Yeah, I agree with that. I think that would be to let people default. I should have let everyone default in 2008. But
yes, of course. That's what I was saying back then. And the longer they delay the inevitable, the worse they make it. I mean, look, that's why we've underweighted the Eurozone. But it seems right now that everything is going down because of all the fear and uncertainty out there. But unfortunately, a lot of people don't know what to be afraid of, and they're buying the wrong thing. But in the long run, the truth is going to come out, and these phony safe havens are going to be exposed for what they are. But anyway, hey, thank you for the call. I'm glad you're listening all the way in Scotland. Let me move back to stateside. I'm going to take a call from Chris, who's here in Manhattan. Chris, welcome to the show.
Thanks, Peter. Got a comment question about the student loan debt. I'm in New York, and I'm watching these the Wall Street protests, and a lot of it is students complaining about the student debt. And, there's some proposals, I think, made by a congressman out in Michigan. He wants to basically forgive student debt as a means of a economic stimulus. What's your position on that? And what would that do to the cost of college?
Well, first of all, if the students shouldn't be protesting Wall Street, if they're upset about the debt, they should be protesting Congress. They should be protesting the government that guaranteed all those debts, because without government guarantees, they wouldn't be in this mess because they couldn't have borrowed the money. And what would have happened was that college tuitions would have come down to the point where they could afford them without the borrowed money. So the reason that students are struggling with high debt levels is the unintended consequences of government policy trying to help the students. And that's why, the most dangerous words in the English language are, I'm from the government and I'm here to help you. So the students should be outraged, but they're directing their outrage in the wrong place. Now, as far as do I support forgiving student loans, look, I've got sympathy to the fact that our kids are struggling with a lot of debt that they shouldn't have. But we can't simply forgive the debt because, number one, what about the cost? I mean, students owe about $1 trillion. So how are we going to pay for forgiving all this student debt, number one? Number two, what about the moral hazard that it sends? Hey, if we forgive the debt of the students today, well, that means we're going to forgive the debt of the students in the future, which means students will be even more likely to run up even bigger debts, basically waiting for their bailout. So that is going to cause college tuition prices to rise even faster. I can even see the colleges advertising, hey, don't worry about how much you borrow. The government will probably forgive it anyway in the next stimulus, so we certainly can't do that. But there is a way that we can forgive student debt. I'll discuss that in a minute when we get back from this break, so stick around. This is Peter Schiff on The Peter Schiff Show.
The Peter Schiff Show. We now return to the Peter Schiff Show. Call in now, 855-4-SCHIFF. That's 855-472-4433. Red Radio, the Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com, and we're talking student loans with Chris from Manhattan and the possibility of the government forgiving student loans. And, the main problem with that, apart from how we're going to pay for it, is the moral hazard that it creates. So there is one way that I would be supportive of a program to forgive student loans. And potentially the forgiveness might have a means-tested element to it. But the way that I would be in favor of it is, number one, we'd have to abolish all government student loans going forward so that the moral hazard did not exist in the future. So we say, look, we're going to forgive the student loans because the whole program was a disaster and we're not going to have it anymore, so no more student loans. But number two, we have to do it in the context of a restructuring of the U.S. government, of its obligations and of its expenditures. So maybe if we means test Social Security, Maybe if we structured the bonded debt, we found a way to really reform entitlements so the government didn't need all that money, then we wouldn't need to take so much money from our young people. Because I think our young people are really getting the shaft here because we screwed them over by artificially bidding up the cost of a college education. We encouraged a lot of people to go to college that would have been better off not going. Now they've graduated, they've got degrees that give them no real marketable skills, yet they have a lot of debt, and we're taxing the hell out of them to pay for Social Security benefits of a generation that imposed a Ponzi scheme on their children and grandchildren, and now they're the beneficiaries or trying to collect on that scheme, and they're giving the bill to the young people. So they're really getting it from both ends, and so we do need to find a way to set this situation right. Otherwise, young people are just going to leave the country. They're just going to go and they're going to work someplace else to get out from under these debts. So I do think it's something that we need to do, but we can't just do it. That doesn't mean they won't. I mean, hey, for all I know, that I think we might have a bailout where we forgive credit card debt. We might start forgiving everybody's debt.
Yeah, I don't think either of your solutions will come to fruition. I think, and I was thinking I was going to ask your opinion, I think that Obama will grab this issue and run with it, and I think that it will come with basically no strings attached. And
well, that's one way to get the votes of the students. I mean, if you promise a windfall to somebody, they're probably going to vote for you.
And he will claim that it's a deficit reducer. You know, he'll come up with a creative way to explain that and say.
Well, how could it possibly reduce the deficit?
Well, he'll say that he's freeing up the productivity of these students who are saddled with that.
Yeah, but also, what is he going to do? So what's going to have to happen, though, is, you know, if the students stop making their interest payments to the banks, the government's going to have to just make those payments. So the deficit is going to explode because money that used to go from the students to the banks is now going to go from the government to the banks. So the deficit is going to explode. You know, it's going to send interest rates up. It should. Maybe that's maybe that'll be the pin that pricks the bond bubble. So it's ultimately, yeah, there's going to be a little bit more money in the pockets of the students, but there's not going to be any jobs. So maybe there'll be less money because maybe some of the students that are now actually making their interest payments will save their interest payments, but they'll lose their paychecks. So they'll be worse off.
Right. I agree with all that. Last comment is just on what you were talking about before, the new bank fees. It's funny how, you know, the Dodd-Frank was supposed to eliminate the nickel and diming, but I have never been nickeled and dimed personally by just my basic checking account, and now all of a sudden I am. I'm getting fees left and right, and I have to call and argue, and, you know, it's creating a nightmare. This whole thing has made it much more.
Yeah, you know, I mean, and the banks deliver a lot of value. I mean, think about the idea of an ATM card, even, and a debit card. I mean, most people, younger people, don't remember the days when you wanted money, you had to go down to your bank and wait in line to get cash, and you had to go to your bank. Wherever that bank was. It wasn't like there were these ATM machines all over the place and you could just put a card in there. That convenience is worth something. I mean, the time that you don't have to waste driving to your bank, and of course banks were only open, you know, bankers' hours, they were open from 10 to 4 or something like that. They weren't open on the weekend, so you had to go to the bank at a certain period of time. You had to drive there, and you had to wait in line. I mean, what did the gas cost you? What did the time cost you? The convenience of never having to go to your bank. I can't even remember when I was in my bank. You don't have to go there. That's worth something. Why should it be free?
Right. And they're also just like some quirky part of the new regulations is going to make it, you know, it's going to make it more enticing for these companies to have their customers using credit cards instead of debit cards, and it's going to dissuade them from having checking accounts, basically. Yeah. So the whole thing is just crazy. Yeah.
All right. Well, thanks for the call. Next up, I'm going to go to Barinda. I get calling from Los Angeles. Welcome to the show.
Hello, Peter. Good morning.
Hi. Morning.
My question, a couple of questions. So the first on China. Notice that China's credit default swaps, their CDSs, are rising quite a bit. Does that tell us anything? I mean, is China in trouble and copper?
Well, no. Well, China can't be. If you're talking about the Chinese government itself, the amount of debt that China has is minuscule compared to the foreign reserves that it has. So China, it doesn't really have any debt. It's kind of like, you know, they could pay off all their debt in a heartbeat, and so there is no concern about the ability of the Chinese government to pay its debts. I mean, it doesn't even make any sense.
Okay. So when I see on I think it was CNBC, this guy says, oh, he's really worried about China because look, as the China market went down, look at how the CDSs rose. That's just, he's just off somewhere.
Yeah, look, unless there's a credit default swap on a particular Chinese debt instrument that's tied to some project or something, that's not. But the Chinese government itself, obviously, the Chinese government is loaning money to governments all around the world. So the Chinese government, they don't technically need to borrow any money at all. I think they do it to try to create liquidity in RMB denominated debt instruments, but they don't need to borrow. They're running surpluses. The surpluses are enormous.
Okay. Well, that's what I thought from listening to you and reading your information and, being someone who definitely appreciates your insight. I didn't understand it, so that's why I wanted to call with the question. Can I just ask, copper going down, everybody goes, oh, my goodness, that means China's in the doldrums. Is that just a matter of markets go up and down?
I think, look, a lot of people, there's a lot of hot money in the market that is worried about global recession, and they're selling anything that is tied to economic growth and commodities. Copper in particular is included in that mix. I never believed that the U.S. economy was recovering. I was always in the camp that the economy was phony. But my anticipation, and I still believe that, is that the government will fight off the recession instead of allowing it to run its course, which would be the better thing to do, by creating more money. And it's the money creating, it's the money printing that ultimately is going to drive these commodities to new highs, I think. And I think Ben Bernanke, I mentioned, I think, yesterday in his most recent speech, he keeps opening the door to QE3, talking about the Fed is ready to take drastic actions if inflation expectations come down. If there's not enough inflation, the Fed is going to go and create it. And, of course, there's never enough inflation for the Fed. But the Fed is just going to look at the core personal expenditure, these measures that it looks at that I think do a very poor job, and I think deliberately so, of measuring the real effects of inflation. The Fed will hide behind these phony numbers, say they're not high enough, and use it as an excuse to print a lot more money. And I think that's coming. And I think, we get a little bit more pain in the stock market. We get the Dow Jones below 10,000. We get another bad jobs number. We got a jobs number coming out a week from today. The Fed is going to, I think, launch its heavy artillery, at least what he thinks is the heavy artillery, and that's more money printing. So it's not going to work. It's not going to help the economy, but it's going to help nominal prices, and it's going to help commodities.
Okay. So it sounds like from what your feeling is as far as the timing that they maybe in October will announce the QE3, October, November. Sounds like maybe you're thinking the timing might be around then.
Yeah, and I think the Fed is trying to build a political consensus around the fact that it's doing the right thing with the QE to try to fend off potential criticism. Because there was some criticism. And I think, most of the critics, apart from guys like Ron Paul, who really understand it, I think most of the people criticizing the QE did it for the wrong reason. They thought the economy didn't need it. The truth is the phony economy does need the QE. That's what's keeping it alive. But the problem is we don't want to keep that phony economy alive. We need to let it die so a real economy can replace it. But when a lot of the people who are criticizing QE, when they realize that we're back in recession, they might be singing a different tune. Ron Paul won't, but some of the other critics would. Anyway, well, thank you for your call. Next up is Joshua calling from Mississippi. Joshua, welcome to the show.
Good morning, Mr. Schiff.
Morning.
Well, I wanted to call. I work in an industry that relies heavily on domestic offshore oil drilling. And I wanted to ask what your forecast for that industry would be in the medium to long term.
Well, I'm bullish. I mean, I think oil prices are going higher, so those are the industries. I mean, I'm invested a lot myself here in the U.S. up in the Bakken Shale Formation. We're drilling oil wells, and so it's one of the few industries in the U.S. that I'm comfortable investing personal funds in. So, I think it's an area that you want to look at.
Well, the biggest problem that I can see is regulation. It's really difficult to drill anywhere in U.S. waters, and I guess that's
Yeah, I mean, that is a problem. That's why I think, what's happening up in North Dakota is so lucrative because, drilling onshore is a lot easier. But, yeah, the regulation is a problem in every American industry. It's not just the oil and gas industry. It might be a bigger problem in oil and gas than in other industries. I think it's an enormous problem in my industry, in financial services. But I think the biggest problem that most businesses in America face today is U.S. government regulation. I think regulation is number one and taxation is number two. And if you take that out of the mix, if we can have regulatory relief and tax relief, we can have a real recovery. But we're not going to get tax relief unless the government shrinks in size, right? Because we need a smaller government in order to have less taxes. It doesn't make sense just to cut taxes and finance government with deficit spending, because that's even more destructive than the taxation. But anyway, hey, thank you for the call. I don't know if you had a follow-up. If you want to hold on, we got a commercial. We'll be right back for more of the Peter Schiff Show on SchiffRadio.com.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
And this is Peter Schiff on SchiffRadio.com, and I'm speaking with Joshua in Mississippi about the regulatory burden, particularly on the oil and gas companies here in the U.S. Joshua, did you have anything more to add?
Yes, sir. Thanks again, Mr. Schiff. I have a quick comment and then a follow-up question. My quick comment is that you're right. It seems every month we have rigs leaving U.S. waters, going to Brazil, Africa, etc., and they're taking jobs with them. It happens all the time, and it's really sad, but I just want to say you're right about that. My question is, I'm young, came out of college last year with a lot of student loan debt and whatnot. And it's hard for me to invest. I can't become a client of yours. But my question is, and I know you've done this before, but what is good advice for people like me coming out of college, not a lot of assets? What can I do to prepare myself for, our pretty bleak future in this country?
What did you study in college?
Accounting.
Do you have a job?
I do. I work. I'm not doing accounting, but I'm working in production control. So.
Well, I'm sure. I mean, an understanding of accounting probably helps you. I mean, it's a major that at least makes sense for people because understanding that would probably help you in a lot of jobs. Although you probably could do the job you had now without your college degree. My guess would be assuming you could get it. But what you could do to prepare is, obviously, to the extent that you have any savings, don't put it in U.S. dollars or U.S. Treasuries. Look towards, precious metals or that you could accumulate small quantities. And other advice I've given to people is just, you could stock up on things that you think you might need that might be more expensive in the future or in short supply. Be careful about how you spend money, about the debts that you incur. And also take a look at the business that you're working in. How do you think the company you're working in will survive or do in a U.S. economy that's under a lot more stress with higher interest rates, higher inflation? If you don't think that particular business is positioned well in that environment, maybe you could be looking while you're still working, to get a job at a company that might weather the storm better. Maybe you could even look at some of the opportunities internationally that might be that offer you better stability.
Yes, sir. Well, I do appreciate your advice, Mr. Schiff, and keep talking because we're listening.
All right, appreciate your call. Thanks for listening. Hey, I wanted to play before I go back to the phones. I wanted to play a series of clips here from Joe Biden talking about Solyndra, back in 2009 when he was so excited to put taxpayer money into this boondoggle. But it's interesting to turn back the clock and listen to what the vice president had to say when he was flushing our money down the toilet. Here, cut number one.
Part of our plan is to make sure that as we create these jobs, we create jobs of the future like the ones you're creating. Jobs you can raise a family on. green jobs, jobs that will serve as a foundation for a stronger American economy, which is why it's so important we invest in Solyndra and invest in what Solyndra is doing, not just to get us through today, but to power our way to a much brighter tomorrow.
You see, it's not up to the government to provide the jobs. It's up to the free market, because then we do get the jobs that we need, because market forces are behind them, and because people are putting their own money on the line and making decisions based on a better understanding of risk-reward. You see, Joe Biden wasn't investing his own money. If Joe Biden thought Solyndra was such a great deal, why did he put his own money into it? Why didn't he get his family and friends to invest in Solyndra? Why do you have to put my money? Why do you have to put taxpayer money into this company? Because nobody wanted to put their own money into this company because they knew they were going to lose it. Here, cut number 2.
I'm really happy, along with the Secretary, to announce today that we've closed a $535 million loan guarantee for Solyndra, more than $500 million. This is the first in what the Secretary is going to be announcing. The Department of Energy will be making available for more than $30 billion in loan guarantees the Recovery Act is providing and will provide to American companies that are leading the way to a new clean energy future.
Yeah, what he doesn't say is that's $30 billion of our money that can be flushed down a toilet thanks to these loan guarantees, because what happens when the loans are not repaid? We're on the hook, as was the case with Solyndra, $535 billion. He's acting as if this is a good thing, that he's putting our butts on the line. What was the upside for America? We didn't get any stock. The U.S. government didn't get stock in Solyndra. All we did is guarantee the loans. So we got none of the upside and all the downside. What kind of stupid bet is that? That's the kind of investment that the U.S. government is making with our money. They should be making any investments. But it's basically heads they win, tails we lose. Why would the U.S. government why would U.S. people ever want to be signed up for a lousy deal like that? Here, let's keep playing this. Cut number 3.
The loan to Solyndra will allow you to build a new manufacturing facility, and with it, almost immediately generate 3,000 new well-paying construction jobs. And once your facility opens, there will be about 1,000 permanent new jobs here at Solyndra and in the surrounding business community, and hundreds more to install your growing output of solar panels throughout the country.
Yeah, how does he know that? Obviously, he doesn't. He doesn't know anything. That's why he's the vice president. That's why he's not running a business. Yeah, why do we want to employ 3,000 Americans to construct something that we don't need, when they could be doing something better if we left it to the free market? But here's the real money quote. I'll play the end of this. Here, cut number 4.
It's important. It's important because these jobs are going to be permanent jobs. These are the jobs of the future. These are the green jobs. These are the jobs that won't be exported. These are the jobs that are going to define the 21st century, and the jobs that are going to allow America to compete and to lead like we did in the 20th century.
Yeah, from his mouth, unfortunately, it didn't go anywhere else. Permanent jobs are already gone. We didn't have to export them. They died of natural causes. They died right here in America because the company is bankrupt. All those people lost their jobs, and now we lost $500 billion guaranteeing it. But, you know, the job that needs to be lost is Joe Biden's and Barack Obama's. But every time they talk about their vision for the future and what they're sure is going to happen, just think back to Solyndra. Think back to the words of Joe Biden and how confident he was, how absolutely confident he was that this company was going to thrive, that it was going to provide permanent jobs, that it was the future. It's bankrupt. And you know what? Our future is going to be bankrupt, too. If we don't get rid of Joe Biden and Barack Obama and everything they stand for and other members of Congress that believe in the same nonsense, America's future is Solyndra's future. That's the problem, because Biden might have been right about that. He may be right. Maybe our future is Solyndra's future. That's the problem. Anyway, don't go away. We got another full hour coming up on the Peter Schiff Show here on SchiffRadio.com.
You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on. Call in now. 855-4-SHIFT. That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
This is Peter Schiff at SchiffRadio.com. Hour 2 underway. We will be taking your calls on this open line Friday. 855-4-SCHIFT is the number to dial. You know, if you don't get enough Peter Schiff today, you can watch me this evening. I will be on the Lou Dobbs program on Fox Business tonight, 7 p.m. Eastern Time, so make sure and check that out. Now, also, if you haven't signed up for the New Orleans Investment Conference, it is not too late. The conference is October 26th down in New Orleans. It's always a great time, a good event. I will be there. If you sign up through Euro Pacific Capital, through this program, the Peter Schiff Show, rather, mention that you're calling from us. Not only will you get a discount, but you will also get three free copies of my books, How an Economy Grows and Why It Crashes, Crash Proof 2.0, and a little book of Bull Moves, 3 books, all which I will be happy to autograph for you at the New Orleans conference. So if you're not already scheduled to attend, make a point of signing up. Anyway, let me go back to the phones and back across the pond to Bologna, Italy. Will, welcome to the show.
Hey, Peter, thanks. It's Will. I'm actually an American, but I'm a student over in Italy for the year. And actually I've been living outside the U.S. for a while in Scotland and in China before that. But my question, what I want to ask you about is I've been watching this, the Occupy Wall Street movement, this protest that's been going on for a couple of weeks, and I kind of learned about it maybe a little after it started. It wasn't getting much press coverage, and now it is, and I was reading about it. I came across, an article that said there was a group of Tea Party protesters that went down to protest against the protest. And they were saying, you commies trying to stop business and all this stuff. And I was like kind of dumbfounded and flabbergasted because, I'm a fan of yours. I'm a supporter of Ron Paul. I've read my Rothbard and my Hayek. And I think I have a good idea as much as anyone of what's going on. And I kind of thought that the Tea Party started around a similar libertarian ideology and basis, and I know it's been co-opted by Fox News and by mainstream Republicans and Bachman and all these crazy people. But the true Tea Party people in America, the true libertarians, I'm wondering they should really be embracing this Occupy Wall Street movement. And while there's
It depends on how you want to look at it, because I think a lot of people will look at this, Occupy Wall Street as not just, an attack on Wall Street, that Wall Street is simply symbolic of an attack on capitalism, an attack on entrepreneurialism and that aspect of America, which is wrong. The problem is Wall Street is giving capitalism a bad name, but I think a lot of the protests aimed at Wall Street are really aimed at capitalism, and just Wall Street is the symbol, or they believe to be the symbol of capitalism, and in fact, it's the symbol of the opposite. It's the symbol of crony capitalism today, of corporatism, of fascism. I mean, that's was my beef with Michael Moore, who refuses to come on my show. But I noticed that he recently is talking about how, hey, capitalism has to end. We have to get rid of capitalism. That's not what we have to get rid of. We have to get rid of all the government intervention in capitalism. We need to go back to capitalism. And Wall Street right now is a big part of that. So while I have sympathy with the protest movement, I think a lot of the protesters don't really know why they're protesting it. I don't know that their protests are in line with what you and I are thinking. Maybe that's true for some of them, but I think most of them have a much bigger agenda in mind rather than just the bailouts. I think it's a more deep-seated distrust or dislike of the free market capitalist system, and they want a more government-controlled system. They don't realize that that's what we've got now, that's why it's not working. Anyway, I don't know if I've lost my caller. I thought he might have had a response. But we will move on. I'll talk next to Mike calling from Long Island. Mike, welcome to the show. Is Mike there?
Hey, Peter.
Hey, Mike.
I'm a big fan of your show, and I'm excited that I'm finally talking to you. Had a question about the Solyndra issue, and I wanted to get your opinion. I mean, I feel the U.S. Solar firms cannot compete with these Chinese counterparts, especially when there's in the news that China is subsidizing these companies there. And I feel we should, our government should stop subsidizing our companies here in the U.S. In solar and wind, whatever new energy solutions that coming up with. And we should make use of the Chinese subsidies, let the Chinese taxpayers pay for our cheap solar panels. I mean, I just wanted to get...
Well, yeah, I mean, absolutely. I don't think that any government should subsidize any industry. And I think a bad excuse is that, well, some other country's government is subsidizing it, so we should do the same thing. And, two wrongs don't make a right. And just because one government is doing something foolish doesn't mean we have to follow in that example. We want to allow our industries to thrive based on market dynamics. Now, rather than, though, figuring about which business we want to subsidize, why don't we acknowledge the fact that we are inhibiting almost all businesses? The opposite of a subsidy is a tax, and we are taxing everybody too much. We are regulating everybody too much. So rather than doling out subsidies, how about if we roll back all the regulations that are inhibiting all businesses in America?
Yeah, thanks. But I just had a small concern, I mean, I'm sure I'm missing some logic here. I mean, what happens if we sort of depend on Chinese solar panels, for all, let's all Americans depend on Chinese solar panels, cheap solar panels?
Well, let's say if the Chinese want to sell us solar panels at a loss, if the Chinese government wants to tax its people so that we can buy solar panels for less than it costs China to produce them, that hurts the Chinese. It doesn't hurt us. Now, you're saying, well, what about in the long run? We don't have a solar panel industry. Well, maybe we don't need one if we can keep getting them for cheaper than we can produce them ourselves. Because if we had to produce them ourselves, the question is, well, then what would we have to give up? If we can get solar panels cheaper from China because of Chinese government subsidies, then let's take those solar panels and let's use our resources to build something that China isn't subsidizing. But if we end up just subsidizing our own solar panel industry to make up for the stupid thing that China's doing, then we don't have the optimal use of our resources.
Sure. But there's no long-term threat. I mean, they can't hold the American consumers hostage to, price increases because they know.
No. I mean, ultimately, the problem is the Chinese government really is subsidizing everything Americans do right now by propping up our currency and propping up the ability of our government to go deeper into debt. That is doing damage. But, of course, that's damage of our own making. If we had sound money, if we weren't running up all these deficits, then we wouldn't have thrown China the rope with a noose around our necks. So whatever pain the Chinese can ultimately inflict on the American economy is the result of stuff that we did first.
Okay, very good. Thanks, Peter.
Yeah, thank you for the call. Next up is Sean calling from Long Island, New York. Sean, welcome to the show.
Hey, thank you, Peter. How you doing today?
Okay, how are you?
Good. I wanted to comment about new grads now are basically permanent interns for jobs. I mean, that's including my sister, too, and that's because of the regulatory environment, right? I wanted to hear your opinion on that. But,
well, you're talking about non-paid internships or paid internships?
$10 an hour, and they're working hours like their regular job, but they're only paying them an intern stipend.
Well, I mean, I don't know if you have the intern, maybe you avoid having to bring them on as a permanent employee. You classify them as an intern. Do you get away?
That's the situation my sister's in, yeah. And,
yeah. Well, look, regulations make hiring people less attractive. I mean, why do you think there are so many independent contractors? Why do you think there are so many temporary firms? A lot of companies use temporary agencies permanently.
Yeah.
Because they don't want to bring employees on their books. Why is that? Because the government makes it unattractive to do so. If you threw out all these rules and regulations, people would hire people. There'd be no reason why they wouldn't. But when you complicate it, when you vilify employers, when you tell employers, yes, go out and create jobs, but if you don't do it, precisely the way we say you have to do it. If you overlook a certain rule or a regulation, if you don't do this, if you don't dot that I, if you don't cross that T, watch out. You're going to get fined. You're going to get sued. Then it's like, well, then why bother? I mean, why take a chance on creating a job if I might create it wrong and end up getting punished for it? So the safest thing to do is create as few jobs as possible. And some small businesses just say, I'm not going to create any jobs. The best way to make sure I don't run afoul of any of these rules or regulations is just not to have any employees. Then I don't have to worry about it. That's the situation we're in today, and the biggest losers are the young people who now can't get jobs because the government has made it so risky and expensive to create them. Anyway, don't go away. We're going to have more of the Peter Schiff Show coming up on SchiffRadio.com.
The Peter Schiff Show. To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America. We're sorry. Peter Schiff is back on the air.
And this is Peter Schiff here at SchiffRadio.com. Before I go back to the phones, I got another, amusing clip here. This is from the Jimmy Kimmel Show in Los Angeles. Ava Longoria of Desperate Housewives was coming to the defense of Barack Obama. And anyway, here's what the actress had to say. Here's cut number 9.
No, but you know what? It's a special privilege to meet our commander-in-chief.
Sure, yeah.
And, I'm a big Obama supporter no matter what he's been through. He's been beaten up the past couple years. He keeps getting beat up lately because there's such an extremist movement happening, and it's very dangerous. For me, it's very dangerous because it's not the character of America. It's really under attack. And he's been governing in, like, a state of emergency since the time he went into office. So we haven't really seen him do what he can do.
So, really, in other words, so she's going to be an Obama supporter no matter how badly the economy is under Obama, no matter how many bad things he does. I mean, think about this. She's saying that he could really do a lot of great things, but he's not doing those great things because, the economy's in such bad shape. Well, if he could do a lot of great things, now's the time to do them. Right? It's not. You can't say that he's not doing good things because the economy is a mess and therefore he's operating with his arms tied behind his back. I mean, because the economy is a mess, that's when he needs to do these great things. In fact, when he ran for office, the economy was a mess. He promised to solve the problems. Now she's making excuses for why the situation isn't getting better. I mean, imagine if John McCain had won the presidency. Would she be giving him this much slack? Would she be making excuses for John McCain, saying, hey, he got dealt a bad hand, give him a break, he's not on your life. She would be screaming bloody murder to get rid of the guy, and would that be out of the American character? I mean, it's not, the attack isn't on Barack Obama because of who he is or the color of his skin. The people who are, quote-unquote, attacking him are attacking his ideology. They're attacking what he's doing. And they're attacking the fact that the economy is not thriving but floundering with Barack Obama as president. And what we really need to do is get rid of him. Again, she's trying to make excuses because she likes him and she supported him, and she doesn't want to acknowledge the fact that she was wrong, that she was mistaken to have supported. Not that supporting McCain would have been much better, because I don't think that he would have implemented the policies that were correct, and I think we would be in trouble with McCain as well. Anyway, just food for thought for Ava Longoria, and I'm sure we're going to have more Hollywood types coming out in support of Barack Obama, regardless of how little that support is actually deserved. Anyway, let me go back to the phones. Next up is Darren calling from out in California as well, Marietta. Darren, welcome to the show. Darren, are you there? I don't know if Darren can hear me, so let me skip him, and I will go to Lynn Ann in Albuquerque, New Mexico. Lynn Ann, are you there?
I'm here. Good morning.
Good morning, or afternoon, or whatever. Anyway, what's up?
Just a couple of quick comments with respect to Solyndra. Out here in New Mexico, there are a couple of kind of trial solar panel fields, and it's interesting that the quality of the solar panels is so incredibly poor. We recently, maybe a month or so ago, had a minor earthquake that was over 100 miles away from one of these fields, and that earthquake shattered all of those solar panels. Not to mention, hailstorms, they shatter them as well. So the quality of these things, it's just amazing how much money and time and resources are spent on these things, and they just continue to try and fund them and waste precious resources. It's very frustrating, but I don't think anybody talks about, the quality of them is so poor. They're far from being, the be-all, end-all.
Yeah, well, look, anything the government is getting behind is just not, the quality isn't going to be there, because if the quality was there, we wouldn't need the government. The government comes in and tries to subsidize things that the market doesn't want. If the market wanted it, it wouldn't need the subsidy. And so we end up perpetuating things that we shouldn't have, and in the process, we prevent the things that we need or we should have from being provided. If you want to think about it, think about how innovative is the post office. Is that what we really want? Do we want the entire economy to operate like the U.S. Post Office?
No, absolutely not.
Yeah, and when the government tries to pick winners and losers, you see what they do. They pick Solyndra. That's what they pick. And, and the problem is they're picking it with our money. So it doesn't cost, the government doesn't care that it costs taxpayers half a trillion dollars or $500 million or whatever it was, $500 million. They don't care because it's not their money. I want people investing with their own money, so they're more careful about putting it at risk.
There's too much danger involved there.
Well, anyway, thank you very much for your call. Next up is Brian calling from Washington. I guess Washington State, correct, Brian?
That's correct.
Yes, what's on your mind?
Well, I want to know, do you think that it's important for Austrian economics to come into universities and for it to replace the socialist element that currently dominates?
Well, absolutely. I think that it would be a big move in the right direction to have more Austrian economists out there. I know UC Berkeley has approached me on a couple of occasions, trying to get me to fund some scholarship program to try to create a Austrian department or some type of Austrian school a presence within the UC Berkeley econ or business department, which I am sympathetic to. But I have mixed feelings about giving more money into colleges and universities where I think the problem is too much money. I would be much more inclined to support these efforts if government got out of the way. But I might do it anyway because it is very appealing to me, and that is my alma mater. And, I would like to see some of the people going to these universities more exposed to this way of thinking. Of course, a lot of people can get exposure to Austrian economics. You don't have to go to a university. You don't have to pay the high cost of a degree. You can study this stuff on your own, and you can learn a lot. In fact, most people who understand Austrian economics didn't learn it in university because it's not taught. They learned it on their own. Anyway, hey, thanks for the call. We will be back with more of the Peter Schiff Show on SchiffRadio.com.
The Peter Schiff Show.
Dancing, I just wanna watch you dance. All right.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
The Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com. Before the show started today, I was watching on CNBC, as I often do, and I watch, Fox Business and some of these channels just to kind of get some good ideas and see what's going on and get some material for the show. And they had David Stockman on, who I think did a really, really good job. I've had him on this show before. I think I'll have him on again, but did a very good job kind of pointing out a lot of the problems that we have. But before Stockman came on, they were discussing the possibility of a wealth tax. And I'm not sure if this tax is actually getting any consideration in the Obama administration, but talk about a very destructive tax. They might as well call the wealth tax the economic and job destroying tax, because talk about eating your seed corn. They're talking about just a tax on people's wealth, just what your net worth is or something, just send in a % of it. I mean, that would be a horrible precedent to take in this country and would cause people to maybe try to find a way not to accumulate wealth and try to get more of their wealth offshore or somehow put it beyond the reach of government. Because remember, you already paid taxes on your wealth when you earned the money, and now to tax it again. But, of course, the real precedent is a legal one. It would be totally unconstitutional for the U.S., the federal government, to have a tax on wealth unless, of course, they apportioned it, which they're never going to do. You know, direct taxes have to be apportioned. The Constitution, the only thing the Constitution says twice is that direct taxes have to be apportioned. Now, you know, the income tax was a direct tax. They amended the Constitution so that the government could tax it. I can have a whole show on whether or not that amendment actually changed the Constitution. I mean, the fact of the matter is the income tax is actually on the books as an excise tax, and it's not an excise tax, it's a direct tax, and it's really not being enforced in pursuant to the 16th Amendment. But anyway, they did amend the Constitution, and if we wanted Congress to be able to tax wealth, we would have to amend the Constitution if we want them to tax it without the rule of apportionment, which is what they did for the income tax. So they would have to do it again. Now, maybe the government would come up and try to say that a wealth tax was actually an excise tax on the privilege of having wealth or some nonsense like that. But that would be a very, very big stretch. I mean, it would be harder, I believe, to justify a wealth tax than it would be to justify Obamacare. And I think Obamacare is clearly unconstitutional. We'll see what happens there, although the Obama administration seems convinced that the courts will once again ignore the Constitution and affirm Obamacare anyway. It would be even more difficult for the courts to look the other way and allow a direct unapportioned tax on wealth at the federal level. So that would be a big disaster on many, many fronts were it to ever materialize. I mean, that is exactly in the wrong direction. We don't want to tax wealth. We want to encourage the accumulation of wealth, and wealth is used to grow the economy. Obviously, if somebody spends their wealth to buy something, they're going to pay a tax on that. They're going to pay sales taxes. If the federal government wants to replace the income tax with a sales tax, hey, I'm in favor of that. But if people aren't spending their wealth, what are they doing with it? They are making it available to others to grow the economy. They are making investments themselves in capital. They are making loans to people who are investing in capital. They are employing people. They are loaning money to people who are employing people. It is the wealth that generates the economic growth and the jobs. And if you try to diminish wealth through taxation, you're going to diminish economic growth and you're going to diminish job creation at exactly the point in time when we need more of both. Anyway, let me go back to the phones. We still have quite a few people on hold. Next caller is John calling from Silver Springs, Maryland. John, welcome to the show.
Thank you. My question is, why are not more people talking about the fact that assuming we are headed for higher inflation, which is going to make the value of what is in the Social Security Trust Fund worth less and increase the Social Security payouts, that the Social Security system is going to go bankrupt sooner than most people think, in addition to the fact that most baby boomers now are being told, because of their age, to put more of their assets into fixed income. We are talking about the baby boomers are about to be financially destroyed from inflation. And this
well, of course, yeah, they are. I mean, first of all, Social Security is already bankrupt. You know, it's just that, you know, we haven't acknowledged that. And not only is it bankrupt from an actuarial standpoint, I mean, it's even bankrupt from a cash flow standpoint, in that we are not collecting enough in Social Security taxes today to make the Social Security benefits that are being paid today. And, of course, these payroll tax reductions only, jeopardize that even further. And one of the ways that Social Security benefits are being reduced in real terms is that the COLAs are increasing at a rate that is far slower than the actual increase in the cost of living. And so the Social Security benefits are being diminished. But I am completely convinced that one of these days, and sometime soon, people who are rich, right, people who have a lot of dollars, are going to go to bed rich and wake up poor. That there's going to be a collapse in the value of the dollar, which is why, I'm encouraging clients, to get out of dollars now, get out of currencies and own real assets now, own foreign stocks, own precious metals, even though in the short run, look, the people who have their money in dollars right now for the last quarter, those people have done a lot better than people who have, bought foreign stocks or bought gold stocks or bought anything. People who have bought treasuries have done better in this last quarter than people who bought anything else. But they're playing with fire. It's a giant game of musical chairs, and when the music stops, if you're in treasuries, you lose. And I think the risk is so great. I don't care about the short-term volatility. I think it's too important. I think the risk that people take in holding dollars and holding treasuries because of massive inflation and a collapse in our currency is too great that the best thing you can do is get out early and just ride out the volatility. Tune it out. Don't worry about it. It doesn't really matter what your wealth is if you're measuring it in a currency that may not have any value in the future or will certainly have a lot less value than it has in the present.
But this is going to be an earthquake for the baby boomer generation at a time when they will not have the ability to fix the problem.
Well, absolutely. Look, I made the point yesterday that the people that have the most to lose by not addressing the entitlement problem are the people on Social Security right now. Because if we don't address this problem by making serious structural reforms, which includes big cuts in benefits for people who are currently getting them, if we don't do that, then we're going to destroy the value of those benefits for the people who are getting them, and they're going to be practically worthless. So they've got the people who are resisting politically the efforts to make changes are the ones that will suffer the most if we don't make the changes. That's the irony, and that's what I want people to point out. I think that's a winning political issue for somebody who can articulate it in a way that makes sense. I know it's difficult because you set yourself up for some very nasty sound bites going the other way. And maybe it is impossible. Maybe there's no way to explain the Social Security problem with a soundbite. Maybe it's too difficult,
Why is this not front page news on the Wall Street Journal?
Well, there's a lot of things that the Wall Street Journal gets wrong.
To me, it's obvious.
Well, there are a lot of things that are obvious to me that the majority of investors and the general public, are oblivious to these things. And so what you and I think is obvious is not so obvious to most people. Look, I thought the housing bubble was obvious back in 2005 and 2006. I thought the fact that prices were going to collapse and that the banking system was going to implode as a result, that was all obvious to me, but nobody could see it. But now in hindsight, that's now obvious to a lot of people that couldn't see it real time. So I think what you and I are pointing out right now, what's obvious to us will eventually be obvious to just about everybody else. But by the time that happens, it's too late.
Do you think there's a deeper problem that we are not getting good people into high positions in government?
Well, I mean, of course. Of course. I mean, and look at the people we nominated. Look at the Republicans. I mean, look, we got Ron Paul, running for Congress. But, look, who have we nominated? Who have the Republicans nominated? Since Reagan, not one Republican candidate that I have supported has won the nomination. I mean, I didn't support Bush Sr. I didn't support Bob Dole. I didn't support George W. I didn't support McCain. And yet this is who the Republican Party keeps nominating. That's got to change, and the makeup of Congress has got to change. The makeup of the Fed. I mean, all this stuff has got to change. We've got people in government that are part of the problem. We need a clean house. We need to bring some people in there that can be part of the solution. But in order to be part of the solution, you've got to understand the problem.
Yeah, the future of the country is at stake.
It is. It is at stake, and and the future is now. And we are here. We are living through that, and we need to do something. Anyway, thank you for your call. Next up is Mike calling, local call from Connecticut. Mike, welcome to the show.
Peter?
Yes.
Hello?
Yes, Mike,
how are
you're
you
on.
today?
Good.
My question, I guess, is more of a comment. In Connecticut, we have what's going on is this bus boondoggle that's going on between Hartford and New Britain. I'm not sure if you're aware of what's going on. I guess they want to spend $500 million to build a 9-mile busway between New Britain and Hartford. It's going to travel every 3 minutes. I'm just trying to get the word out, I guess, just to get people locally to try to speak out against it. My state senator, Joe Markley, I'm not sure if you know who he is. he's actually trying to block it right now by raising some kind of bogus environmental concerns. But it's a hard fight. We're actually sending letters to Washington to try and get them to beg them to save ourselves. I'm just wondering if you know about this or if you're
No.
on it.
Nope. First time hearing of it.
If you go on Facebook, there's a page. It's called Block the Bus. There's all kinds of good information on there. And also, if you go to Senator Joe Markey's Facebook page, he's also got a lot of information on there. Excuse me.
Yeah, all right. Well, thanks a lot for the heads up. Next up, Rich calling from Tampa, Florida. Rich, you're on.
Hey, Peter. Thanks. I enjoy your show. Peter, my question is a couple questions, but what are your thoughts on whether do you think we're going to be able to pull ourselves out of this debt crisis that we're in? What do you think the odds are?
No, we're not going to pull ourselves out of it. We're going to be enveloped by it. I don't think we're going to have a solution until there's a crisis. So we're not going to avoid the crisis. We're going to have the crisis. And then it is my hope that we will respond correctly. We will take the appropriate action once there is a crisis. But as long as the crisis isn't imminent, politicians will never deal with the underlying problem. They will simply try to postpone the inevitable pain in hopes of getting through another election cycle. That is just politics. That's how it works, unfortunately. Anyway, if you want, I don't know if you have a follow-up to that. You want to stick around. We got a commercial, and then we'll be back for the final segment of the Peter Schiff Show here on SchiffRadio.com.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com. Hey, by the way, we got a brand new special report out today on the Europac.net website. It is 5 favorite currencies for the next 5 years, and Axel Merck and I team up to discuss our favorite currencies. So if you want to read that report, it is absolutely free. You just need to download it, and it's available on our website at Europac.net. I think I still have Rich on the line from Tampa, Florida.
Hey, Peter.
Rich,
thanks.
yes.
I'll get right to it. Imagine if let's say we do get someone in the White House that you or I would support, and they start implementing the measures, austerity measures that we both know we need in this country. Can you imagine the fallout from that?
Oh, yeah. I mean, that's why I don't think it's going to happen until there's already a lot of pain. I think we're going to have to hit rock bottom. That's an old expression. You're a drug addict. You don't do anything until you've lost your job, your wife's moved out with your kids, you're thrown up on the street. I mean, it's all falling apart, and then maybe you finally admit that you got a drinking problem. Well, I think that's what it's going to take for the U.S. to admit that we got a government problem, a regulation problem, a spending problem, a cheap money problem. We are addicted to all this stuff. And, until we're lying on the pavement in our own puke, we're not going to do anything about it.
Now, what are your thoughts on the FDIC? Before I let you go, I mean, as far as deposits and the banks. Now, my understanding, I thought they were raising the limits to $250,000. Did that ever happen? I thought there was discussion of that a couple of years ago.
The FDIC already did raise the limits, I believe, on the size of the deposits that they back up. But the reality is, every single time a bank has failed, the government has bailed out all depositors, regardless of how much money they had. That's part of the moral hazard.
Right. I guess what you're saying is, had they were making better decisions and choices on how to invest that money, but who cares if they bail them out and the dollar's not?
Yeah, I said, look, I keep my corporate money at Bank of America precisely because I think that when they fail, they'll get bailed out. And so I want to have my money with a bank that's so big the government won't let them fail. But what that does is it means that the bad banks end up getting more money, and the good banks are deprived of money. We want money going to the good banks, but because of the government, the money goes to the bad banks instead. That's a problem.
Well, thanks, Peter. I appreciate it.
All right. Thank you for your call. I want to say one more thing, too, about the presidential primaries, too, because I happen to notice a thread on one of the Ron Paul fan sites. I think it was Daily Paul or something, where some of the guys were really upset at me because I said some nice things about Herman Cain. And, first of all, a lot of the people that are on these threads, I was a Ron Paul supporter before most of these people were even born. But just because I happen to have a favorable opinion of Herman Cain doesn't mean that I don't support Ron Paul. As if, they're actually acting as if I'm going to tilt the election to McCain by saying nice things about him. I wish I had that kind of clout in the Republican Party. Unfortunately, I don't. If I did, they would all be supporting Ron Paul. But, I don't think people who like Ron Paul should be upset if some support goes to Herman Cain's way, because Herman Cain's support isn't going to come from Ron Paul supporters. It's going to come from a Romney. It's going to come from Perry. And if Ron Paul is going to win, he's got to knock these guys down. And even if he doesn't do it himself, even if Herman Cain does it for him, hey, it's got to be done. Eventually this field is going to narrow quite a bit. A lot of these people are going to drop out, I think, once we have the New Hampshire primary. Because what happens is people start losing some primaries and their funding dries up. And they can't raise money, and they can't continue, and they bow out. That's not going to happen to Ron Paul. Ron Paul is going to stay in this thing. Because he's got a following that will support him regardless of what happens in these primaries. He's going to get money. He will go on. And so eventually, if Herman Cain isn't going to be the winner, he's going to drop out, which is probably more likely than that he wins, even though I think he's a better candidate than the front runners. Hey, as I mentioned, the Republican Party has a history of nominating people that I don't like at all. And so if Herman Cain eventually drops out, his supporters are up for grabs. Ron Paul has a much better chance of getting those Herman Cain supporters from Herman Cain after he drops out rather than getting them from a Perry or a Romney had they stayed there all the time. See, once they make a switch, once they say, you know what, I'm no longer in love with Perry, I'm going to go to Herman Cain, well, it's a lot easier than to go to Herman Cain to Ron Paul than if they had stayed with Perry the entire time. So, hey, it's not a bad thing that the underdogs start to take support away from the anointed favorites, because we got to take those guys down anyway. But as I said, I'm still a Ron Paul guy. I said on that show yesterday, he's my first choice. Gary Johnson I like a lot is my second choice. And Herman Cain is number 3. There's nothing wrong with that. You got to have more horses in the race, because you never know. He could win, and it'd be a lot better. It's still a long shot, as is Ron Paul. But, hey, it's not as long a shot as most people think. I think he's got a much better shot than the media gives him credit for, which is part of the problem. Anyway, back to the phones. Last caller, Peter, calling from Iowa, Ames, Iowa. Peter, welcome to the show.
Hi, Peter. Thanks for taking my call. My question has to do with how the U.S. consumer will benefit or not benefit from a collapse of the dollar. 'Cause we export 80% or so of what we import, so does that mean that we'll lose?
Oh, yeah, the American consumer, the short-term effect of a weaker dollar is going to be a big negative for Americans, because it means that everything that we want to buy is going to be more expensive. But that's the unfortunate consequence of the problems we've created for ourselves. But ultimately, if we do the right things, the dollar will eventually start to gain more value. And to the extent that Americans have to save more and spend less, that is part of the process that needs to occur in order to rebuild the economy. So, yes, it's going to be painful in the short run. But the thing is, if we continue in this current path, the dollar is going to lose even more value. The sooner we do the right thing, the less value the dollar is going to lose. And the easier it's going to be for the dollar to recoup that lost value. But as of right now, we're on a collision course for complete destruction of the currency, which is not going to help anybody, least of all Americans, because, hey, that's what we got. That's what we use to spend, is dollars. That's what most Americans have in the bank. When you're buying a treasury, that's what you got. You got Social Security, it's dollars. You got a pension, it's dollars. You got an insurance policy, it's paying off in dollars. Hey, most Americans are all in on the dollar. Unfortunately, it's a very bad bet to make. That's why I'm not making it. Anyway, hey, thanks everybody for listening. That's the end of the show. End of the week. We will be back again on Monday for another 2 hours of the Peter Schiff Show on SchiffRadio.com, the gold standard in talk radio.